What's going on, guys? Welcome to another episode of the Venture Coinist podcast. I am very excited about this one. I know a lot of traders are out there listening and waiting to hear the insights of the guest I have on. I have the pleasure of being joined by Arthur Hayes, CEO and co-founder of BitMEX. What's going on, Arthur?
Hey, thanks for having me.
Yeah.
This is awesome. Really
Yeah, of
excited.
course. Of course. Thanks for coming on, making the time. I know you're busy. You're running the largest exchange in crypto, and I know your goals are even having BitMEX as the largest exchange. Period, past just crypto, which we'll talk about. But the first thing I want to get into is a lot of people look at Binance, they look at BitMEX as these massive, huge exchanges where, and if they got into crypto in 2017 or 2018, that's probably all they know. But BitMEX has only been around since 2014. I kind of want to talk about the origin story of BitMEX. I believe you got fired. I have a very similar experience. Our company in San Francisco shut down, and that's how I got into crypto. I think you have something similar, and I think that'll be a fun anecdote to dive into the origin story of BitMEX.
Sure. So I was a equity derivatives trader doing futures contracts and ETF market making for the Hong Kong and Singapore Stock Exchange at Citibank here in Hong Kong. And one day I got called into my managing director's office after the market closed, and I got fired. Part of about a 10,000 person cull of employees at Citibank over those 2 years. And once I had gotten out of the bank, I thought to myself, well, I wanted to do something different. I was kind of bored at my job. The remuneration wasn't as expected, given the secular decline in financial services pay packages. So I thought, well, what other things can I get into? What else am I passionate about? And luckily, I discovered Bitcoin. I read the white paper, thought it was super interesting, and then thought about how do you actually trade this thing. And I did some research. I opened my first trading account at MTGOX, and then I discovered a small futures platform called IcyBit, which was run by two Russian guys in the Caribbean. We didn't know who they were, but they were where all the flow was. And I started doing arbitrage between IcyBit, which was futures contracts. I would sell futures contracts expensive, and then I would send cash to MTGOX and purchase Bitcoin and keep that position hedged. And I would roll it every month, and the returns back then were between 100% to 200% per annum return. So much wider basis, i.e. the futures contract minus the spot, than we see today. And that was how I paid my rent and got into Bitcoin.
That's insane. What was like when you first started BitMEX? Did you envision Bitcoin to be that big? Did you envision BitMEX to be that big? Did you think it was a temporary solution, or do you think this was something that was going to be kind of now your career and probably what you're going to spend, I imagine, the rest of your life on until you want to stop? Like, did you
I've
have
been,
that vision immediately?
I had a vision that Bitcoin or some sort of cryptographic money could be very important for how humans interact with money, and how we interact with money changes about every 2 to 500 years. And if you're at that inflection point, obviously there's massive disruption. There's people and companies and entities and governments that lose out, and then there's those who become wildly successful, and that's the basis of multi-generational wealth that we're still seeing today. And so I thought that this cryptographic money revolution could be my chance to participate in one of those disruptive time periods. And that's why I was so excited about it. Now, whether or not BitMEX or myself was able to become successful in this industry, that's up to execution. But I do believe that there is a strong wave upwards, and those who do well are going to do extremely well. And that's why I wanted to get involved.
That makes sense. Um, and a lot of people view BitMEX, and the reason I kind of want to dive in about your vision for Bitcoin and also separate it from the vision of BitMEX. A lot of people view BitMEX as only a money making business or only an exchange, but I think you guys have some initiatives that clearly aren't monetary focused. It's not all profit driven. You have BitMEX Research, which I think puts out some of the best in class research up there with Delphi and some other names, and then you also take out ads in the British newspaper on the 10th anniversary. Why do that? Why do you have those initiatives that aren't necessarily focused on profit and trying to bring the industry forward? I think sometimes you guys get a bad name of only being focused on profit when sometimes there's some other things going on behind the scenes.
I mean, the bedrock of our business and a lot of the most successful businesses in this industry rests on a well-functioning Bitcoin ecosystem. First of all, we only take Bitcoin as collateral, and it allows us to onboard a customer within 10 minutes with no additional cost, and we can process a deposit and a withdrawal with zero human intervention and without having to ask permission from a traditional financial institution like a bank. Now, obviously, we want the robustness of this network to continue to grow such that it underpins our business. If we don't have Bitcoin, could BitMEX exist offering the types of products where we had to rely on a bank to attest to whether or not it likes what we're doing,
Yep.
or some other entity having to say, okay, we allow you to do 100 times leverage perpetual swap, not that we just created it and it was something that we thought would be useful for the market. So that we are dependent on Bitcoin to allow us to be financially creative in the products that we bring to market. So it behooves us to be supportive of the ecosystem, whether that's educating people through the research platform and giving unbiased research that has nothing to do with the products that we offer, more to do with the Bitcoin blockchain, other coins, and other technological things that are happening in the ecosystem, and then just raising awareness using some of the profits that we've generated to let people know that there's something going on here and they should get involved.
Definitely. It's something that, I mean, it's just so different. The reason, yeah, it's different from like Bittrex or Huobi or all these other exchanges, which are really only focused in the exchange business. You can tell there is an initiative, and that makes a lot of sense why the incentives kind of align there. Before we talk about what BitMEX is doing currently and products there and what traders want to talk about, I want to talk or ask you a little bit about. You made a statement on Laura Shin's podcast, and this was mid last year, about BitMEX not only being the biggest exchange in crypto, but being one of the biggest exchanges and financial institutions in the world. How does that work, and how can you make that statement when Bitcoin is still relatively small compared to other assets? Kind of what's your vision there?
So if you look at how every generation changes the way that they consume products and they invest their money. So if we take a look at the 70s and 80s, we had the baby booming generation coming into their prime asset earning years. They're having kids, they're building families, they're buying houses, they're investing in stocks and bonds. And then we also have sort of the IT revolution. So you have companies like Procter and Gamble. You have consumer finance companies like Vanguard or any of these, helping people invest their money in an easier fashion, and basically riding this wave of a massive generational change in the way they consume products, the size of the generation, and their position in the curve in terms of whether they're growing assets or divesting assets. So now that we come to this time period where the baby booming generation and the older Gen Xers are entering the years when they are disposing of assets, their tastes and I guess preferences are less relevant than the younger generations, millennials who are entering their prime asset earning years. And so what do we know about millennials? Some of them on the younger end of the spectrum are digital natives, mobile first. They've had a screen in their hand since they were a young child. They're very comfortable using a service which has very little human interaction. So my mom gets a little freaked out about Uber because she can't call anyone on the phone. She wants to call a physical person, order her taxi, come to her house, and take her somewhere. She doesn't like that there's just an impersonal app that she has to deal with. But for us, that's totally fine. We we are completely comfortable with dealing with an app, a website. We very rarely talk to a human being, and we want fast service. We don't actually have to deal with other humans.
Yep.
So if you take this sort of change in how we deal with services and you bring it to the financial services ecosystem, you can see that analog ways of dealing with money and trading are not going to be successful in the next 10 to 20 years. It's going to be mobile first platforms. It's going to be platforms that deal just only on the internet. And why do we only trade stocks 9 to 5, 5 days a week? Why don't we trade financial assets 24/7? And that's only because the people who are the ones investing in these asset classes like it that way. So if we're used to trading at home from work, being on Instagram at 5 in the morning, shouldn't the way that we trade financial assets change as well? And so I think that this change in how the generations are moving along the curve is also going to dovetail nicely with cryptographic money and other digital assets. So people can be completely comfortable trading a representation of value that's completely digital on a mobile phone, on some sort of platform that's only accessible via a web connection. And sort of, I think that the traditional exchanges, finance institutions, some of them will definitely adapt and some of them won't. But platforms that have come up in this age of you being in the broker, the exchange, the clearinghouse, all these things that crypto exchanges and companies do are going to be poised for success with the millennial and Generation Z as they come up the income earning curve. And
Sure.
that's how I think we become a larger exchange and something you've seen that has become successful over the past 25, 30 years.
In that revolution, so the you brought up kind of millennials, and I would say it's definitely a younger focus, whether or not it's millennials, but are just natively understanding crypto more. They understand, like you said, kind of the digital platforms more and having everything mobile. One of the things with crypto exchanges right now and investing, quote unquote, in crypto is it's so trading focused. It's so speculative in nature, and it's kind of geared. I think every exchange almost gears it towards shorter term trading. Maybe it's the volatility as well, and emotions playing a role. But I think exchanges kind of push you in that direction. One of the things you also mentioned last year is the introduction of an investment type product on BitMEX, so like an interest earning Bitcoin account. Is that still in the works? Is that something that you plan to offer? Because I think that's something where, if BitMEX can get out of this just the crypto sector and actually become one of the biggest crypto financial institutions, not just crypto focused, it would need to tackle that need too, is the savings side, not just the trading.
Yeah, so one thing that I've started exploring on a very, very small scale is how do we generate income natively in first Bitcoin, because that's obviously the biggest coin out there for people who hold Bitcoin. So if I hold some Bitcoin and I want to generate some income from it, it's extremely difficult. It means I have to lend it to somebody unsecured. And, there's been platforms like BTC Jam and some other ones where you can lend your Bitcoin to people you don't know. And the default rates are, quite high.
Yep.
So one of the underpinnings of the fixed income markets in traditional space is that high quality corporates that everybody knows and trusts and have a reputation on the line issue commercial paper, short-term paper, and usually U.S. dollars for their funding needs of their company. Now, usually they don't need this money. It's more that it's operationally and financially efficient for them to borrow money instead of using their retained earnings. So that should happen in crypto as well. I want to create a future where the highest quality exchanges and miners, because those are the easiest people who earn Bitcoin natively as revenue, issue short-term Bitcoin bonds to the ecosystem. So let's say that you want to buy some 30-day paper. Why can't you buy a BitMEX 30-day zero coupon bond that yields some rate of interest that reflects the market's determination of our credit risk? Or the Coinbase, or the Kraken, or the Bitmain, or the Canon, or any of these large companies that probably don't need the money, but they have a reputation to uphold. Do I want to default on the ecosystem? So I'm more inclined to pay back this money because I want to keep the good name of BitMEX in good standing. And so if we start to have a almost risk-free curve of interest for Bitcoin, then riskier borrowers can start to price themselves against the rock solid companies in the ecosystem. And people can start to select, okay, I'd like to take a little bit more risk. Maybe I'll go out there. There's a speculative project. They're going to build X and they need 1,000 Bitcoin and they're paying a 20% per annum yield. I'm going to go and buy that issue. So now we're really creating a credit curve for Bitcoin, and people can start natively borrowing it and creating businesses around in the crypto space, borrowing crypto, having no outside currency exposure. That really helps generate this ubiquitousness of the use of Bitcoin and other cryptocurrencies, and that really takes our industry forward. So that's something that I'm looking into now, and hopefully in the next few months I can come up with a sort of a paper, if you will, or a test transaction to see if there really is interest for this and somewhere we can get this fixed income market going. And obviously, from a selfish perspective of BitMEX, the fixed income markets are much larger than the FX markets.
Yep.
If you think about the largest contract on the CME is a euro dollar futures contract. So if we can start to trade interest rate derivatives on our native crypto credit curve, which is comprised of the best quality companies in the space, that's really going to take our platform to the next level and help us achieve our goal of becoming the largest exchange most profitable in the world.
And another one of those products that I think kind of no other exchange or really no other company has been able to take the leap and leave kind of this crypto sphere and become, start to, and it'll happen as crypto gets bigger. But one of the things you want to offer is, and you also mentioned it in the same conversation, was allowing people to invest with their Bitcoin into maybe equities. So it's single stock derivatives and things like that. There was an exchange, one broker, I think, last year that went under. But is there still plans for that, or are you guys trying to drum up a solution for that?
So we have funded a startup in their seed round who I'm not going to give out the name yet because I don't want to put undue pressure on them to deliver. But hopefully by the summer of this year, you will be able to use Bitcoin and purchase the S&P 500 and Nasdaq Q's indices
Yep.
using Bitcoin. And essentially, you won't have any Bitcoin US dollar risk. You'll send Bitcoin, they'll FX it into dollars, and then allow you to buy a swap. And then when you want to leave, you'll sell the swap, get back dollars, and then you can get back your Bitcoin and then go along your way. So this is hopefully going to allow people in emerging markets who don't have access to some of the most liquid and notable indices in the world to use their Bitcoin to access traditional equity indices. And so we'll see, the take up on this later this year. But that is definitely something that one of the startups that we've invested in is working on.
And will that be offered directly through BitMEX platform? Like, will that be alongside products like your Perp Swap and your altcoin futures, or will that be a completely separate entity?
That'll be a completely separate entity.
Okay, cool. I wanted to bring that up. I think that's just one thing that people haven't been able to tackle. And if you have that vision of this actually, being able to compete with the largest financial institutions, it has to be on something past just speculative short-term trading. So I'd like to hear that initiative. In terms of new products, you've built the most successful Bitcoin product, the Perp Swap, and right now in this industry, it's probably the smart thing to do. But exchanges copy you and Binance. You guys are clearly the market leaders. What's kind of your goals for new products that are closer, more aligned with what you have right now? Are there plans for perp swaps and other alts like Ripple? Are there plans for more futures? Are there plans for more options? What are you kind of thinking with your current offering?
So obviously we want to take in the success of our perpetual swap and take that further. So we launched the perpetual swap on Ether US dollar in August of last year, and within 2 months that became the most liquid Ether US dollar trading instrument. And the twist that we did with the altcoins is we added the Quanto feature to that, which basically allows you to use Bitcoin as your margin currency, and this is your profit and loss currency as well, and to trade risk that doesn't have anything to do with Bitcoin. So obviously Ether US dollar, there's no Bitcoin in there, but there's a certain number of Bitcoin per point, and that's how you earn. Now, obviously, this is an exotic derivative, and there's some nonlinear components which have to do with the volatility and the covariance of the three different assets. But from a speculator's point of view, this is great. I have Bitcoin. I want to speculate on the Ether versus US dollar price, and I want to get my money back in Bitcoin. I don't really care about all the mechanics below the surface, and I really like the perpetual swap structure where I don't have to worry about expiry. There's a funding rate that I might be able to earn if I'm in the right direction. So that's sort of the twist that we've taken on that. We do want to launch this on other altcoins versus US dollar. We do it versus the US dollar because that's usually the price that people care about. We do already have futures contracts with altcoin versus Bitcoin. Those are fine, but I think as the Ethereum US dollar contract shows, the market really wants to trade against the dollar. Yeah. And the reason that we haven't launched anything since the Ether US dollar product is actually it was too successful. As many users know, we do suffer from this overload issue, which basically is our trading engine can't handle the amount of orders that want to be processed through our system. And we added this product last summer after the team that built this technology did an amazing upgrade in terms of the ability to process orders in the span of 3 months. And so they allowed us to list a new product. And the product was so successful that we're not back to square one, but we don't have the amount of excess capacity that we did back in August of last year. And so company-wide, we've been on a moratorium for new products while we work on re-architecting our entire trading engine, which is going along, and we hope to have that finished in the third quarter, fourth quarter of this year.
Okay, so I'm glad you mentioned kind of why you haven't listed a new one. I mean, that's an incredible problem to have. It was so successful. I was curious because I think a lot of people have thought this. When does a Quanto come out on something like XRP or on EOS? Because there's maybe it's true, maybe it's not. There's a lot of factors that probably led to ETH's decline, but a lot of people point to ETH USD Quanto coming out and now it being an easier option to short ETH, and that if another Quanto comes out, it could kind of be downward or selling pressure or lead to a more efficient price discovery on these coins if your trading engine can support it. So there are plans probably to offer more Quantos on things like XRP or things you already currently offer futures on.
Absolutely. So I mean, we are looking at adding one more coin when we get the green light from the trading engine team. We haven't really decided exactly what that's going to be, but we do like this quantum perpetual swap structure. And to my knowledge, we're the only platform that offers this structure. There are other platforms that offer the ability to use the altcoin as margin and speculate. Now, obviously, that's good for the holder of the altcoin, but if you really want to have risk that's disassociated from holding your margin collateral, then you want to use, either say US dollars or in our case, Bitcoin. So that's, really the twist that we're adding just that generates, I think, the interest from the traders.
And a lot of your traders are focused in Asia. I know there's a lot of Asian clients you guys have. With those Asian clients, the Western crypto versus the Eastern crypto is a topic that's getting brought up in Twitter a lot and also in different spheres, and people are writing all these Medium articles about it. And it's the view that in Asia, there's kind of this massive optimism still. There's still a lot of ICO and IEO kind of craze going on, and just a lot of tokens, right? Like abundance of new tokens coming out and people wanting to trade those tokens. If you have a lot of clients there, is there ever a future where, past just BitMEX being able to handle it, does BitMEX want to list more than just the 5 tokens you have right now in those Quantos? Is there a future where like 20 and 50 and as many coins as exist on Binance exist on BitMEX?
I would say that we're ever going to have as many coins on BitMEX as on Binance, because when you enter the derivative sphere, then you need to have sufficient liquidity in the spot markets to generate a tight market. So, in my opinion, the futures market should always be tighter and trade larger than the underlying of this derivative. And that only happens if you have sufficient liquidity in the spot market. So are we going to go and list like number 200 on CMC? No, because the market makers won't be able to hedge their risk. They won't be able to borrow the coin. There won't be enough. The spread will be so wide on, say Binance, for example, because it's, the long tail of coin, that if they're going to price a derivative, the derivative have to be this much wider.
Yep.
And so from a client perspective, that's a terrible experience. I'm trading a leveraged product that has a wider spread than the underlying spot market, and I'm just increasing my risk of getting liquidated. And that's not something what we want to do. We want to make sure that when we list a new product, that it's liquid, the books are full, and that the market makers are able to make good, tight prices for clients, because that's what they come to expect at BitMEX.
That makes sense. And thinking about other exchanges and how you rank up, if we're just going to view kind of derivative exchanges and people that offer perp swaps and futures versus other exchanges that offer that, how do you view competitors? Or CME I think just did record volume on the 4th with that Bitcoin pop. They did like 500 million. I know you guys do in the billions in terms of volume, but I'm not sure the breakdown of perps versus futures. How do you guys view CME? Is there like a particular strategy that you're saying, how do we iterate faster than them? How do we get more institutional clients than them? Are you guys viewing exchanges like Deribit and Bybit that are maybe trying to steal some of your market share? Or are you just kind of blazing your own trail and letting them follow?
So if we talk about the CME, I think that the CME launching futures contracts is an absolute great thing for our entire ecosystem, because from BitMEX's point of view, we do not target their client base. Number one, their primarily client base is, American. We don't take Americans, obviously. Their client base are the Goldman Sachs, the Fidelities, these large financial institutions who trade on their platform. We don't cater to those platform. We cater to, more sophisticated retail traders, and as you said, mostly out in Asia and Eastern Europe.
Yep.
So their client base is completely different. The type of product that they're going to list is completely different. Lower leverage, US dollar, margin, like just stuff that we are structurally cannot do. So for them to bring on a new segment of traders into the space who would never trade on a BitMEX, like a Goldman Sachs or JP Morgan, these guys are not coming out and trading with us, but they'll definitely trade with the CME. So they're bringing on a whole new type of people into our ecosystem. They're generating more trading volume for traders who are able to bridge both of those siloed pools of liquidity. There's arbitrage opportunity. So we actually make even more money because now you're going to trade the difference between the CME product and the BitMEX product. So absolutely, we are super positive about what they're doing, and I hope they do even more volume on their platform, because the more people that trade our asset class, the easier it is for trading volumes for everybody to take the next level up, and hopefully the price go higher as well.
That makes sense. And then the last question I'll ask you about competitors are kind of themes that other exchanges are pursuing. It also kind of still relates to your Asian clientele. Is everyone's kind of copying also in the exchange business of the IEO model is working, and Binance is, I think they have plans to offer leverage. I'm not sure if that's public yet, but the API showed it, and you have I think Huobi was planning to offer leverage. All these new exchanges want to offer leverage, and they're also adding these IEOs. Or exchanges are now rushing to launch their own token. Is there a future where BitMEX ever has its own token, or is that even a conversation you guys have ever had?
No, I mean it's complicated in terms of what is the legality around the token. Is it security? Is it not a security?
Yeah.
We have more than enough issues to deal with, and my legal team has more than enough things to work on than creating a whole other set of issues, because we issued our own token for money that we don't need and new problems that we didn't need to have. So I think obviously the BNB token is a great example of a company being very creative and creating a whole ecosystem around their token. I think Season's a very smart guy. We are just not set up, and we don't have the view that we should do something similar. And as I said, we don't need the money, so there's no point in bringing on those issues to our platform.
Okay, cool. I wanted to bring that up. I forget who the last exchange was. I don't know if it was OKX or who it was, but someone was announcing a new exchange token. I just figured it didn't fit here, but I figured I would ask anyways. I think there was outcries on Twitter for if a BitMEX token would do well. So, the thing that I also wanted to bring up, and I did this with CZ as well, I want to voice not the concerns of traders, but I think what traders are asking about the most, so we can get it directly from the source. And as I reached out on Twitter, I kind of talked in the communities of people that are trading on BitMEX and different things like that. Obviously, the issue you already brought up is the one that was brought up the most, and I think just to clarify it would be really good for traders. A lot of people have asked, what is overload? What's going on there? And then is it even something you're working on? Because there was a theme last year. I think it was a bigger problem than it is today, and then it seems to have went away, and now I think you cleared it up. When the ETH Quanto came out, it came back. So what are your kind of plans to tackle that, and why does it even exist when other exchanges are saying, look, we'll never have overload?
So I think that's a false statement. Do our volumes and see if you don't have overload. Bitcoin and crypto exchanges are fundamentally different from, say, the New York Stock Exchange. So a lot of people say, well, why don't you just go buy, the matching engine from NASDAQ or New York Stock Exchange or the CME or yada, 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 XYZ different exchange. What they don't understand is our model is fundamentally different in this ecosystem. In the traditional world, you have seed holders, or in the derivatives, it's called I think it's an FMC or whatever the acronym is. These people are the gatekeepers. They are the only ones allowed to directly access the market, and then they provide brokerage services to their end clients. So me as a retail trader, unless I am wealthy enough to have a seat or important enough, I cannot directly trade on the New York Stock Exchange. I cannot directly trade on the CME. I have to trade through a broker who will take my order, check that I have enough money, and then push that order to the exchange. The exchange matches. So all these platforms have to do is match orders for a very small subset of clients, and that's why they can do it extremely fast. They don't have to worry about doing all the other things that we as a crypto exchange have to deal with. And if you come to our space, we are leading a new revolution where anyone with an internet connection can sign up on a website and directly access the exchange or the matching engine. That is a completely opposed to how you do it traditionally. So when you allow hundreds of thousands of people to directly access your matching engine, that means that the amount of capacity going through is that it's very difficult to accommodate this flow because you're not restricting people like you are in, say, a traditional exchange. And then when you come and you add 100 times leverage derivatives, we need to make sure that our math is correct all the time, which means we spend a lot of time risk checking orders on order submission. That's where the bulk of the work happens. Do you have enough margin in your account? Can you afford to place this order? Would this order, if it matched, cause another order to liquidate? And then we have to match all these orders, and we have to do this all at the same time. So it's an extremely difficult engineering problem to solve when you're doing billions of dollars a day of flow on your system and you can't take any shortcuts. You can't pause for, say, a few seconds, like we think some exchanges do, match all the orders, and then restart trading because we only have 50 basis points of maintenance margin. We don't have the courtesy or the luxury of taking a little pause, and the market, even if the market moved a percent, that's fine because no one's going to get instantly liquidated. But in our system, because it's so razor thin, we have to be always matching trades or checking that people have this money in their account before we allow a match to happen. So long story being short, when our volume sort of took a hockey step upwards in 2018, we encountered a whole new set of problems. My co-founder Ben Delo, he built this system to get it out to the market as quick as possible and be extremely mathematically correct. It wasn't optimized for a platform open to anyone with an internet connection trading 100 times leverage. Yep. And so that's what we're going through right now is we have a whole team of people who are re-architecting this system, splitting apart the different components, parallelizing them, and putting this all back together so that we have a trading engine that is much faster, that can eliminate overloads and allow us to list more products. Now, the actual overload situation is essentially, obviously it sucks when you get an overload, but would it suck even more if you place the buy button and then sat there and maybe 5 seconds, a minute, 10 minutes, you got a response saying, oh, either your order was matched, which you're like, what the fuck? The market's over here. I matched over here. I put my order in again 10 minutes ago. Or you get no fill. And you're still like, what the fuck? I placed the order. The market, I was right in my trade. Market's all the way up here now. So we had to make a decision. Rather than have people sitting there in limbo and not knowing whether the order got filled or rejected, we said we're going to target, and I think it's about 3 to 5 seconds of latency between pressing the order submission button and getting a response. Now, if we have too many orders in the queue, that's when overload happens. Okay. So the reason why we put this overload in is to give people certainty on whether or not they actually got their order into the system. There have been other platforms that have had the same issues with capacity, which don't give you any insight into what's happening. And you sit there, and I've heard, 10, 20, 30 minutes where you don't get a response from the trading engine. So we think this is a much better experience given the capacity constraints that we have.
And since it's peer-to-peer, it's not like, you're not a dealing desk. You can't, in a period of extremely high volatility, it's not like you can just widen the spreads and say, look, you got filled here. It just doesn't work like that. And you brought up the queue. This is the deepest I want to go with this. I think that's the other concern of what people said with overload is, are some people getting filled in there, or, is there some kind of selection going on there, like seniorage or you know what I mean? Like, are people getting picked based on something and not facing overload? And are there specific clients that are facing overload, or is it kind of just
everyone faces overload equally? And we constantly get requests from clients who say, hey, I will pay you X money so that I get a private API so that, when overload happens, I get jumped straight to the front of the queue and I get my orders executed. I'll pay you for that. And it's one of our core values at BitMEX of fair play, in that we don't want to offer a better trading experience than somebody else. Everybody is equal. Everybody will suffer equally in this overload situation. And that's something that we stand by.
Cool. That makes sense. Appreciate the transparency there. In terms of, since you guys do have such razor thin margins with people that are going to play the 100x game, I'll call them people, some people call them gamblers, whatever you want to call them, is the insurance fund is something you have where I think this also gets maybe mischaracterized. And BitMEX Research put out a really good piece about why it matters and why it's there. Now, the funny part is you could view this now on a site called, I forget what the site's called, but it's like a trading view, and you can watch the size of the insurance fund just kind of tick up. And people are like, why the hell does that exist? And should it be this large? My question to you is, should it be this large? And if it gets to a point where it's too large relative to the volumes trading there, what are your guys' plans with it?
So I do not think it's anywhere near large enough, right? Because we have been in a phase of very low volatility. Yeah, in the past week or so, things have really picked up,
For the
but
first, yeah, for the first time in 6 months or something.
exactly. But for the last 3 to 4 months, we've been in a 20 to 30% annualized, 30-day annualized volatility regime. Now, if you fast forward back to I think it was March of 2017 when the Winklevoss ETF application was disallowed.
Mm-hmm.
That was when the market dropped about 30% in 5 minutes. I think we had a few hundred Bitcoin in the insurance fund for our XBT USD perpetual swap, which got wiped out, and people had the automatic deleveraging experience where they placed the correct trade, but they didn't get to participate in that full 30% down move. Obviously, almost over 2 years later, people have forgotten about this. But if you have the right trade on and you don't get all your money, you get pretty pissed off. And then you think, well, how irresponsible is BitMEX for offering 100 times leverage? They should reduce the leverage so that when I get my trade right, I get paid. Right. So
Arthur, I don't want to cut you off, but before we talk about whether or not it should be this big, I guess I should have taken one step back. Can you explain the process? People are just saying, it's too big. Can you explain what the benefit is there for traders and what kind of that auto deleverage is for people that are unfamiliar with the process? Why does it even exist in the first place?
Sure. So we offer very high leverage on an extremely volatile asset. And unlike, say, the CME, we don't have seat members who put up collateral bonds to fund a guarantee fund to make sure that the winners get paid out. If we were going to say all contracts are guaranteed settlement, that would mean that the BitMEX balance sheet is on the line, and that would mean we would not offer 100 times leverage because we're not going to take that type of risk. So to offer the customers the product that they want, we had to come up with a system. And we didn't actually come up with this system. This sort of socialized loss or step out system was really the first exchange that I've seen, and maybe I'm wrong, where Chinese commodity exchanges. And they have a clause in the contract down in the small print that basically says, if the party who's losing doesn't have enough money, we're going to close you out early in profit. Now, the first exchanges to really do this were the ones in China. And we sort of took this socialized loss system whereby it's a socialized pool. The traders are trading against themselves. There's only, if you're winning money, you're winning money off of somebody else. And the exchange is going to step in with its own capital to support that pool. If there's no more money left in the pool, then there's no more money left to give you. So either we do a weekly clawback, which is what some platforms do, or in our case, we essentially automatically will close you out early in profit at the bankruptcy price of another trader. Mm-hmm. Now that's the automatically leveraging system. Now, obviously, we don't want that to happen. If ADL happened every 5 minutes, nobody would trade on BitMEX because they wouldn't be getting paid anything if they're correct. Well, they would still get paid, but it wouldn't be the massive returns based on the leverage. So the insurance fund is there to help ameliorate this problem. Now, in a traditional trading environment, the equity that you have is yours, meaning after the broker has liquidated your position. So if I go in Interactive Brokers, I short Tesla, Elon tweets funding is secured, and I get stopped out on the upside, and they're able to close out my short, and there's still some equity left in my account. That money is mine. Now on BitMEX and other platforms, that money is not yours. That money goes into the insurance fund. So we take the maintenance margin left over after closing out somebody's order, and we put that in the insurance fund. So if we do a good job as the exchange of creating a very liquid marketplace with lots of different traders with different expectations of the future price of an asset, that means that when we go to close out a large liquidation order, there's going to be money left over after we close it out. and that's that maintenance margin. So that maintenance margin goes back into the pool, which is the liquidation fund. So the insurance fund.
Mhm.
The insurance fund is basically people who have lost their equity because they've gotten liquidated. BitMEX is so liquid that we're able to close that order out and maintain some of that equity. We put this in this fund so that when we do have volatile situations, the money is used such that people can hopefully enjoy their full profit.
Yep.
Now, that is the purpose, and that's why the larger it gets, the more confidence people have placing longer term orders, larger orders that increases the liquidity and that makes it better for everyone. So we hope this grows larger, 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 that entices different types of people to trust the system. Okay, there's all this Bitcoin in there. I know that if I place this massive, September 2019 futures position or whatever, it's, a 2-year trade, I have a better ability to know that I'm going to get paid out. And so that's why the larger gifts, the more confidence you have in the platform. And, at some point, maybe we could even increase leverage further than 100x if that's what the community wants, because we have the ability to pay people out when they're in profit.
Exactly. So, suppose you're short and I'm long Tesla, and Elon does come out with the funding, and he doesn't. The SEC doesn't go after him. I can now hold that position for 3 or 4 or 6 months, because what could happen if that didn't exist was that the opposite of getting margin called would be the winner now has to have his winner cut short because too many people have margin called and can't be passed on to his winnings.
Correct.
Cool. Want to bring that up. If it ever does get too big, I know you want it bigger, and I think that makes a lot of sense for why. I think people now can see the other side of that, and I think it's just liquidated traders that are maybe only seeing the negative side of it. If it does become too big, what would be your plans for that? Was there an announcement of a venture arm for BitMEX? Was that on BitMEX Research, or am I?
Yeah, so we have a venture capital arm, and the venture capital arm is funded from retained earnings of BitMEX, not
Okay,
the.
okay. I was gonna say. I mean,
Fund.
yeah,
So
BitMEX insurance,
our
but
plan,
yeah,
as the insurance fund gets larger, is not to take that money and go buy Lamborghinis or
juice
go
it. Yeah.
party or pay or something like that. The money is going to be used to, there's are things that we can do to reduce the likelihood of you getting a margin call. Now, some people have said, well, it's so big, maybe you should either increase the risk limits. So you can only do 100x leverage up to a 200 Bitcoin position. So if you want to take a sufficiently larger position, you do not get to use the full 100x leverage. And if and when you are liquidated, you can lose a substantially more money than 0.5%.
Mhm.
And some traders have been calling for us to relax those rules and let people trade larger sizes at these larger leverages, which obviously would have impact on the insurance fund. We could reduce maintenance margins. So there's all these things that would happen if the insurance fund got too large, and that is what we would do. We would allow people to use more leverage or take larger positions, and we put all these things in to reduce sort of the moral hazard of the pool, and we can relax some of these rules as the insurance fund gets larger.
That makes sense. Cool. Wanted to cover that. It's I always have to ask a question about the best performing fund in 2018. Right? All the other funds have lost money, so it's fun to see one fund doing well. I was going to ask about up and down options, but I think you've covered that in terms of competitors and other platforms. Just the one really quick one there from traders. I'm not sure too many people asked about this. It's more of a personal thing. Deribit, I think, is offering Bitcoin futures. They're one of the only exchanges that can offer that, not on the institutional side, on the retail side. Is that something you're interested in doing? Right now, you only have kind of those knockout options, the up and down contracts where people can't write them or short them. Is there a plan for that, or do you see an interest in that?
So we are working on a completely new way of doing portfolio margining for our use case in sort of this highly leveraged situation where you don't have seat holders. We have somebody working with some university professors on a very complicated new way of doing this. And so we hope to possibly have our own, options platform in maybe 12 to 18 months. But we're taking a different sort of tack to the way people have done it before, and hopefully changing some of the things that we think aren't successful. The options space, I think Deribit's doing quite well so far in terms of their options space, but I think we're going to need a little bit more time for people to really get comfortable with derivatives in this space before that can really take off and you can get some sufficient liquidity across all the different strikes.
That's all the questions that the traders had that I had about the platform. And to wrap this thing up, I want to talk a little bit about. I think I saw a tweet. It was you last month, and you were on some mountain, and you hinted that winter ain't over yet. After this Bitcoin pop, has your opinion on that changed? Do you think we're still in a crypto winter? Is it starting to thaw? Upside volatility might be back. Do you have a view on that?
So my view, and I think I reiterated this in my latest newsletter, which came out a few weeks ago, was what's changed in probably the last month or so is the noise around, I think it's called modern monetary theory,
Yep.
MMT. It's this notion that you can print as much money as you like and it doesn't really matter. And you can offer all these sort of services to the population, whether it's free healthcare, education, AOC would say the Green New Deal or any other sort of projects that you want to put out there. And I think that central banks and governments in this particular phase of humans' financial history are not going to let markets go down, right? S&P dropped 20% in December of 2018. Fed freaked out, and all of a sudden, there's this
Back to
forecasting
cutting.
of rate cut
Yeah.
in 2019. We're going to start enlarging the balance sheet. The PBOC has triple R cut, I think, twice in the last 3 months. There's more liquidity there. They're swapping bonds. So central banks globally, we're talking about tightening in late 2017, 2018. We obviously saw the impact of that on the financial markets, pretty much flatline from most things. Certain venture capital funds were having trouble raising money. Startups who don't make any money were starting to get questions about when we're actually going to show a profit, how are you going to raise this money? And flip a few months from now, a few months ago, and this whole situation has changed, and you're getting the narrative shifting as printing money isn't bad. It can fund all these different social services. Um, the last 10 years prove this. So let's just do more of what we were doing. And so I think, yeah. And so I think that as it shifts and as the stance of obviously the Fed, which is the most important central bank, changes from tightening schedule to an easing schedule, you're going to get the same sort of silliness in the financial markets that's kind of come back. And that's obviously going to flow into the riskiest set of assets, which are crypto assets. So yes, I think that we could easily be at $10,000 Bitcoin by year end, just because all central banks are now printing money again, just like they were in 2016 and 2017. Now, whether or not we go back down to 2 or 3 thousand from this $5,000 mark, I don't really know, but I don't think it'll be a quick straight shot up to 10 or 20,000, because the first thing that people are going to invest in with all their newfound free money, probably like Lyft, Uber, Pinterest, all these major tech IPOs that are coming to market are going to soak up a lot of this liquidity. And once you get done with those things, and towards the end of the year, then people can look out for the next thing. After they're fully invested in property or the next newest unicorn that makes no money. Then they'll get around to, oh, what's this crypto thing? And that's when I think we can really see some gains rack up in this market.
Okay. And one thing that I think maybe people have taken out of context, or I'm not sure. Maybe you actually did say it, but it makes sense to me. You have such exposure to the Bitcoin market, to the crypto market, owning and being a co-founder and CEO of BitMEX, that sometimes you don't need to hold any extra Bitcoin. I'm sure you have some Bitcoin, but you kind of view BitMEX as you're holding in that crypto. And I think with your initiatives and BitMEX research, it shows that you do want to bring the industry forward. You do want to expand the industry because the incentives align with also growing your business. Some people have said, you might not be bullish on Bitcoin or have kind of a vision of wanting to increase Bitcoin long term. What is your view on Bitcoin long term? And the reason I'm asking is I have to ask the question, what do you think the Bitcoin price target is long term, 3 or 5 years out? You've thrown around 50K. You just said 10K maybe by the end of the year. The news headlines and people love to hear these big round numbers. So I'm curious what your vision is there, and kind of the price target as well that people like to have fun with.
Yeah, I mean, in terms of vision, financial privacy, I think, will be dead in under 5 years, because I live. If you go to China and you need to buy, say, a drink at a bar, most places now don't even take renminbi or cash. You pull out your phone, you get out your WeChat Pay app, you scan a barcode. Now, as a customer, this is an awesome experience. I don't need to worry about change. It's instantaneous. I get my drink faster. However, it's a centralized company, Tencent, that has all the data on all these payments. Now, I think the PBOC wants to bring that in-house into they control everything. And governments, as we know, love control. I don't care what the ism they claim to believe in. What they really want to do is control every facet of your life and make you completely dependent on them. And so the last frontier is money. Cash is terrible for governments unless you're the dictator trying to smuggle money or whatever, or the CIA running drugs everywhere around the world. But cash is a terrible thing for government. It's hard to tax. You don't know what people are, the activity that they're doing. They could be doing unlicensed activities and receiving payment for them. Now, if I outlaw cash and I give you a nice app, it's super convenient, and instantly pays for things. I now know everything that you do. I can tax you at the point of every activity that you do in your whole life, and I can lock you out of the financial system if you don't abide by my rules. Now, this is extremely sexy for governments. I think China and India are going to be the first to really do it, but every other government, I don't care if you're in the West or the East, will ban cash in the next 5 years. And at that point, people are really going to discover what financial privacy really means. And it doesn't mean holding $1 million of gold bars in your basement, because it's really hard to move that around. You're going to need some sort of digital cash. And that's where you really see the value proposition for Bitcoin finally clicking in everyone's head when they realize, oh shit, I used to be able to take out a $10 bill and go buy a dime bag of weed, but I can't do that anymore. There's no more cash. I got to use this app. And oh shit, the app is controlled by the central bank, and they know everything I spend my money on. Oh, I was lying on my taxes. Oh shit, they know that I bought this 911 Porsche that I couldn't explain by my income. So all of a sudden, people are really going to think about, how do I get financial privacy? And at that point, crypto is going to take a next leg forward. Now, whether that's Bitcoin or something else, I have no idea. Bitcoin is probably the most, I guess, widely known crypto, and it most likely will be the successor. In terms of a price target, I don't know, say 50,000 in the next 2 to 5 years, but it could go materially higher if the world plays out the way I think it's going to play out.
Yep. And the last thing before I let you go, I like that vision of kind of people waking up to that privacy disappearing, and cash being outlawed. That's something that it's a dystopian future that not a lot of people consider, but slowly our privacy is kind of being clawed away. My last question is, as it relates to price, you own an exchange and you make money. I think you've said no matter if it goes up or down, right? It doesn't matter if it goes up 100% or down 100%. People just want volatility. They want to be entertained. How long do you think that lasts in crypto and Bitcoin? How long do you think we continue to have these volatile cycles of extreme booms and busts? Or eventually does it normalize as BitMEX becomes larger and as CME offers these futures, as more institutions get in and as quantitative strategies get in? Usually that can kind of dampen volatility a little bit. How many more cycles do you think we have of this just ridiculous boom and bust?
Well, I mean, it really depends on the size of the asset, right? So Bitcoin is still extremely small, which means that a small amount of money relative to the global financial system will create intense volatility. Imagine 100 million people discovering they need to have privacy now and needing, I want to have a few $1,000s worth of Bitcoin. That's going to be extremely volatile because the asset base is so small. So the only cure for large volatility is a large asset base. So either the price goes up so much that Bitcoin is a trillion dollar, few trillion dollar asset class, or it goes to zero, right? But either way, the only cure for volatility is sorry. So I'm basically saying the cure for volatility is a large asset, so it has to go up. If it goes up and it's a $15 trillion asset class, then it's going to be less volatile because it takes a lot more money to move it. So Bitcoin is very, very small right now. We have a lot more time of intensely volatile scenarios. And if traders want a lot of volatility and the asset class is super big, you just increase the leverage.
You're laying out the perfect scenario for a bigger insurance fund, more volatility, and this 200x. I think we could even see 500x in the future. Arthur, thank you so much for coming on, man. This was a lot of fun. You guys heard it first. 50,000 is still on the table, and all the plans for BitMEX to not only be the speculative and the kind of the trading capital of crypto, but to also be one of the biggest financial institutions in the world offering those different savings and products that we just don't see in crypto yet. Arthur, thank you so much for taking the time, man. Appreciate it.
Thanks for having me.
Yep.